Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Canoo, ticker symbol GOEV. And so here I am recording this on Thursday, July 4th. Happy 4th of July. And so Canoo closed on Wednesday, July 3rd at a price of $2.23, being down about 4.3% on the day, but that was after having a pretty nice big move going up over 15% on the 2nd, which was Tuesday. And we can see here, looking at the chart, it does look like we have broken out of this downtrending channel, so looking pretty good. But before I get into the chart, I did want to point out that the last time I put out a Canoo video was right around earnings time. Actually, I did stream their earnings on May 14th. And at that time, you can see that price was still higher than it currently is, closed that day at a price of $2.79, so being a little bit lower than that now. But if we do take a look at the bounce from the low here that was hit on June 14th at a price of $1.44, we can get a measurement up to current price. It's up over 50% from that low. And if we actually adjust this to the recent low that we saw hit on the 25th, it's up almost 40%, so not looking too bad there regarding that bounce. And also, I did want to go over, the reason why I have all of these lines drawn up here. I actually didn't draw any of them for this video. I've gone over it during Sunday night live streams. It's usually requested, and so I've been able to keep up with Canoo that way. And so if you don't tune into those streams, if you don't do it live or check them out later, I do put timestamps on them. It's a really great way to get my perspective on stocks on a weekly basis if I do not put out weekly videos, as it has been almost 2 months since I put out the last Canoo video. But yeah, I just wanted to go over some of these levels. One is this uptrend that I have drawn here based on the low that was hit on March 14th, that being at a price of $1.22. And then again, this low here, $1.44. I feel like there is a possibility at some point in the future, not necessarily anytime soon, that price could be coming back down to that level, tested as support again. So if that does happen over the course of the next couple months or so, that could be a great dip buying opportunity wherever it falls on that line at whatever point in time. But right now, I actually think that the price is likely to continue higher. And so there's a couple reasons for that. One is that, it's basically from this bounce here, we saw a big green candle up almost 21%, 20.99% on June 26th, got some sideways consolidation or a bull flag, and then we got another big move to the upside on July 2nd. And so that was again over 15% up on the day. Looks like we're consolidating again, so I suspect we will be forming another bull flag. But it's also quite possible that we could retrace to the scene of the crime. And looking at this chart, I would say that would be coming down to this downtrend, testing that as support before the next leg up. So coming down to that level could correspond with coming back to the low that was hit on April 12th at a price of $2.07. Or, price could come down to $2 a share, that being an even round whole number. Price could test that as support. That would be coming down to here around July 11th. That does look like it would correspond with a continuation of that downtrend. So I could see that. So if price does pull back to $2, that might be a nice dip buying opportunity before a bounce. And also, looking at this, where the cursor is, it's at 199, does look like there was a good amount of consolidation right around there between $2 and 207. So that consolidation in this range here, that could be acting as support if we do get a pullback. So if it does pull back to $2, don't panic. Just kind of look at the chart, see if it looks like it's respecting that level. Wicks down, closes above. that could be a great dip buying opportunity. But looking at the levels above or right around where current price is, actually this one is above now since we closed below it. This is the 236 at a price of $2 and about 29 cents. That is based on this Fibonacci extension. So going from the low here up to the high, pulling that down to the low over here, and that gives us these numbers to the upside, and that is the Fibonacci extension tool here in Webull that I am using. And you can use that on TradingView, other things like that. So it's a very useful way to kind of get these levels. Of course, all of them kind of being approximate because we might get some wicks above or wicks below, but we do want to be seeing closes above those levels. And so right now we saw one close above $2.29, closing on Tuesday at a price of $2.33. So comfortably above that level, but we did get rejected from this orange line here, the 786, from this retracement, that being at a price of $2.37. But given that that is so far in the past, I'm not sure how significant it is. Did seem like it acted as a good bottom level here, hitting a low on May 7th of $2.38. So we can see it just kissed that line right there. Did get some consolidation around there above and below that line, and then these two wicks above it. So maybe there is something there, something to be paying attention to. And so the high of Tuesday was at a price of $2.36. So it would be good to be seeing some closes above that level, $2.36 to $2.38. Nice to see some closes above there. But really what we need to see is closes above these wick highs here. Those are really suggesting that that could be or is, a near-term top. We need to be seeing closes above that, holding those levels, multiple closes above those levels, and then to be pushing price higher. And so the high that was hit on June 14th was $2.65. So hopefully we can be getting up to like $2.75, closing above there, moving our way up, forming more bull flags with big green candles, and then consolidation to continue higher. The next level up here is the 382. That is at about $2.81. Now, it looks like we did see a top right around here, kind of a double top here, consolidation above that level here. So maybe there is something significant there, but what really, stands out to me is going to be the level of $3 right around where the cursor is there. So that's between the 382 and the 50% retracement. It also does seem to correspond with the convergence of these two lines here, right around $3. So I suspect that will also be some resistance. If we do get up to that level, maybe we see a pullback to maybe 250 or the 260s, testing these wick highs as support. Also some consolidation here that might be acting as support. Get up to 3, pull back, start to move our way higher. But yeah, I think that this is likely to continue higher, but if we see a pullback, like I said, to $2, 207, it could be a great dip buying opportunity. And if we see a retest of this uptrend, whether that's, a couple of weeks from now, a couple of months from now, or maybe even a year or two from now, whenever that may be, I think that this level will be retested again. And it might, since it is uptrending, be retested at a higher price than the current price. But I do think that will be happening, and I think that would be an excellent dip buying opportunity. But for the time being, I suspect this will be going higher. Like I said, dip to $2 would be a great opportunity to add some more. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and happy 4th of July. Take care.